Hi and welcome back to Cheeky Crypto. My name is Nick, and today, guys, we're going to be jumping back down into the world of Cardano. Following on from the previous videos that we've been doing, we're going to see what is likely to happen next on the current structure for ADA and all that wonderful stuff. As I get into this video, if you find it useful and informative, smash that like button. Really do appreciate that. If you're new to the channel, then why not go ahead and subscribe, tap the bell, select all the notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. And if you haven't yet joined us in Discord, why not check it out? Linked in the description down below. I don't think you'll be disappointed by what you find down there, so why not go ahead and check it out. Let's jump right down into this one, though. We've got a fair few things to kind of talk about, so we'll start things off by taking a look at this one here. So this is smart money concepts with some EMAs on there and a few yellow boxes that I've drawn on because I think there's fair value gaps here that smart money concepts by 𝗕𝗓𝗪𝗧𝗐 didn't seem to pick up. I'm not sure why. I mean, to be fair, this one we've just filled out. We filled this out a few days ago, so that's not too bad. This one was still left behind, and so is this one down here. But anyway, we'll kind of digress. I'll remove this one off here for now. We don't need that. So let's talk about this. What's going on with smart money concepts on Cardano's ADA, right? So this is the daily chart, Binance, and USDT is the pair, right? And we can see that we're still in a bearish state. We haven't actually got confirmation that we're outside of this bearish structure. So we had the change of character from the higher end when we had the all-time high. Okay, this actually was confirmed as a change of characteristic on February the 18th, 2022. We then got confirmation that we were bearish at this point over here in May of 2022. We also got a confirmation of a continuation of our bearish trend over here in October of 2022. And we obviously have our current low as it stands at the moment in December of 2022, right? So we know that all of these things that are still occurring still remain in a bearish state of play for Cardano's ADA. What we're looking for is we're looking for a trend structure from like an Elliott wave theory perspective, and then we're looking for a change of character to indicate that we are bullish, right? And that's going to be our indication that things are starting to heat up to the upside. But ultimately at the moment, Cardano is actually still in this bearish state because it's failed to break it. We can also see this yellow line here. This, I believe the yellow, let me just check it, is the 200 EMA, right? So the yellow line is the 200 EMA, and we can see that we found that the 200 EMA is our resistance. Okay, now historically speaking, it's also been resistance here and here, and we lost it up here before we got the change of character to the downside. Now, from traditional finance, you look at a 200 EMA as your trend filter. If you're below the 200 EMA, then typically speaking, you're in a bearish market. And if you're above the 200 EMA, you're in a bullish market. Ultimately, we keep seeing the 200 EMA as our resistance. We also find that we've been riding down on this 50 EMA, and we find this has also been pretty much resistance for us, although not as clean as that 200 EMA. For example, there were some moments where we were piercing above this area, briefly, but for the most part we were still riding it, finding it as resistance. Small moments of breakouts, but nothing major really occurring. So we have this continuation to the downside. Now, smart money concepts outside of EMAs, we can see that there are some minor structures that have started to emerge. Okay, specifically on this daily chart, we were in a small minor change of character to the upside, and we had a break of structure. We took this up nice and high, but recently we've had a bearish change of structure at a micro level. You can see it right in here. Okay, we've moved back up. This is pretty common. You break the structure, you rally back up, kind of like rebound up, and then you drop back down in that bearish state. A new break of structure, or CTS, will form when we actually come down into new lows, lower than our current price, which would be our low of 29.76. Okay, so for the most part, that's kind of where that sits. And from our kind of areas here for smart money concepts, we can see that equilibrium is above our 200 EMA, and equilibrium also happened to be exactly where we rallied to, where we found that 200 EMA. So we know that there's a lot of resistance there, and not only that, we can see these red blocks. These are internal sell order blocks. Okay, you can see these guys in here. These are also going to be providing areas of selling pressure, basically making sure that ADA is suppressed at those points. So although we kind of want to think, look, this looks massively bullish, unfortunately, it doesn't actually align that way when we actually take a look at a bigger macro piece, right? We can have these kind of minor movements to the upside, this very overlappy corrective structure by the looks of it, and then this kind of interesting kind of structure appearing to the downside. So let's jump down into that and let's take a look, right? So here we are on the 4-hourly chart. And we can kind of see some minor movements of interest to us, right? We know that there's a lot of corrections going on inside here. And we can also see that there's this interesting structure coming down into these lows. And you can see that I've kind of tried to marry this up in a 5-wave structure over here. We can kind of see some kind of maybe 1, 2, kind of 3, 4, and 5 kind of area over here and so forth, right? And I've left it pretty open at the moment because it can be in multiple different things, and I'm waiting to see what happens on this side to see if that clears up what happened on the left hand side. So we can see that there's some interesting structures in here, lots of 5-wave counts, and these could be double zigzags, triple zigzags, and things like that, or they could be impulsive structures. It's not overly clear yet. Now what we do know is we can see this move to the upside, and we can see this correction to the downside. If I take this to the hourly chart, we can also reflect on what is happening inside this little area here. Okay, so we had 5 waves going up, which means that if we start with 5 waves, we must end in 5 waves. And I'm going to scale this back down again. We start thinking, is this actually the bottom, or are we in some kind of flat correction? Okay, now it's possible, and why I left this open here, that we are doing something like this, which is A up, B down, going lower than origin, and then C wave up. This is what is known as a running flat correction. It's very rare or peculiar in the way that it's kind of structured out. It catches a lot of people because there's so much going on. It's really hard to understand exactly what is going on when you see these kind of 5-wave structures appearing to the upside like this. Now, in any flat correction, you must end in 5 waves, right? So this is one of those scenarios where we end up in this situation where we see 5 waves going up here, and we almost instinctively want to think that we're in an incredibly bullish scenario where we can see at least an A, B, C structure, right? And it's possible that this does play out. However, we shouldn't ignore the fact that it's also a very strange structure that led up to this that could allow it to be a running flat correction. So caution here, because essentially there could be a couple of different things that are going on, and they would take us in 2 different directions. Now, on this hourly chart, when we reflect on this recent move to the downside, one of the things that we need to consider here is this looks like 3 waves going down. This looks like 3 waves going up here. And then we're starting to see an interesting 5-wave correction to the downside. So to me, this looks like we are probably going to be doing a 3-3-5 correction, and monitoring that 5-wave structure over here is going to be very important. Okay, one of the things I would be expecting is going to be a move to the downside in and around this kind of 31.57. It's got to go lower than that, in my opinion. However, that count would be wrong if we were to go higher than 36.73. So we would know that if you go up higher than that, then we're wrong on thinking that we are in some kind of A, B, C structure to the downside, right? And likewise, if we go down lower than 31.57, well, we're right, and we're confirmed that we're right, and we're moving in that direction. Now, with all that being said, we are kind of have to acknowledge that this is potentially going to go in either direction, but I think the most probable scenario is that we come down here, even though our momentum and our oscillator down at the bottom here is saying that we're oversold on the 1 hour anyway. Now, if I scale this back to that 4 hour, you can see we've got plenty of room to go down. So that gives me room to think that we have some minor correction upwards and then more of a deeper move to the downside. My expectations are that we do some 1, 2, 3, 4, and 5 structure like this. Okay, and that's why I think we're likely to come down here. Okay, I do think we are in an interesting structure, and I think it's going to end in 5 waves. Which does not mean that we know more about what's going on here on the left-hand side, because this is still only a 3-wave potential correction, taking us down slightly lower, and it probably will not go down lower than our low of our origin down here at 29.76. And if it does, well, then we have our answer. This is, in fact, a running flat correction. If it doesn't, then we're in no better position knowing exactly what structures here are going on, and we kind of need more data to allow us to kind of work out exactly where things sit. So, knowing these things, let's focus in on this current structure. We'll be looking for a 5-3-5-3-5 at a micro level. And we think we can see this right in here. So let me go ahead and grab my fibs. We're going to run this right up here to here. We hit the 1.618. We go up into a 4th wave. We've got to go down into a 5th. So my expectations are that we come down a little bit. And we're probably going to have to come down to our area around here. This is real minor, and might even play out before this goes live. I don't know. 32.87 to 32.25 approximately. Real minor stuff. So I'd be looking at this as the beginning of our structure. That would be our wave one. We'd then look to come up, probably up towards kind of 34, 35 cent, but we shouldn't go up higher than the origin here, which would be 34.91. Okay, so hopefully you're following this. If not, check out 𝗕𝗘𝗪𝗀𝗀𝗀com, linked in the description down below. There's a fair few things there that might help you understand what I'm talking about a little bit more clearly. Ultimately, we're looking for something like this to occur. Okay. Big 1, 2, 3, 4, and 5. Okay, that wave 4 will be 30%, 38.2%, and so forth. Right, so we don't know where these targets are necessarily going to go until we get into these structures, and that's if this is right. Okay, there's still the possibility that wild card that we go up higher, and I'm proven wrong on this because it is still possible that we've just got this minor correction right here. And all of this structure going up, although doesn't really give us a good bead at the bottom, could still be our area for thinking of this as another 5-wave structure upwards. It could be a wave 1, for example, right? So we want to be a little bit cautious. We could have some kind of 1, 2, 3 down here for a wave 1, quick correction for 2, up into 3, down into wave 4, then up into wave 5, right? And we would cross the 36.73 if that is the case. So keep a close eye because it is possible that we do that. I just think that the most likely scenario is that we actually pull down before we can rally on up. And, you know, we have the targets that are kind of associated with everything there. Now let's jump over, not into that one, but into this one here, right? This is our daily chart. Again, this is just scaled out with nothing on it at the moment. And what we want to do is we want to focus in on some of these key areas, right? Where are we likely to find ourselves with these big resistances? And well, when we start looking at this area over here, the consolidation from June and July 2022, this allows us to understand where we find the overlaps, right? And the overlaps are very, very important to us. So I'm going to just pick this one right here. I think it's going to give us, yeah, this one right here is a really interesting zone. And then I think right in here, in fact, we probably could actually come down to this one, down on the low side, if I'm being honest, and drag that across there and across there. Okay, so over here we can see the lots of demand in this range here, taking price upwards from it. And the second that the demand started to dwindle down, it basically lost all the demand, and then it became selling pressure, right? People who were buying up here, for example, because they saw that this was an area of support, they were buying here and they lost it. And as soon as price comes back up here, they can get out cost neutral. They come out of their positions and price comes back down. So what you've gone and done is basically you found support here, or what is commonly known as a demand zone. And then over on the right-hand side here, you found something what is called a supply zone or the resistance zone. So right up here, you can see support, gone to resistance. And this is important because this range is reasonably broad. It's between 40.23 and 44.83. And if we were to think about this move coming up, we have to get past this area of previous resistance, right? So if we want to be super bullish on the market, well, then we've got to look at this as a potential move upwards, right? And we'll talk about 52 cent as a potential bullish movement. Now, I don't think this is likely to occur, but we can kind of see it right inside there, right? 52.51 potential to the upside, but we'd have to get past this resistance. And if we do this, then of course, we've got to turn this resistance then into a support level as well. I don't think this is something that we can look at right now, but it's going to be interesting to kind of see how that kind of plays out. Ultimately, from a bigger macro structure here, we are not trending. At best, I think really what's going on here is that we've kind of got a lot of zigzag patterns being strung together. I went through this before. I think we had a double, and then I think we're potentially looking at a triple zigzag, which is the maximum number. But ultimately, I think, yeah, Cardano is well placed. We've kind of been tracking Cardano quite well for a while. You can kind of see here, we were expecting a move to the downside. Then we got down here, we were expecting a move to the upside. We've moved up, and now I'm expecting a move to the downside. And I think that's very much still where I sit with this. I still think there's a little bit more room to the downside here, but I would expect some volatility as well. I'm not expecting things to kind of just magically move their way upwards. From a smart money concepts, everything is quite lined up, is lined up quite nicely. For the most part, I'm not too concerned over everything else is going on there. And yeah, I think that's that kind of sums up everything that's going on here at the moment. My expectations are a slight move to the downside until we kind of finish this structure out, and then we can talk about a bit of a bullish movement back to the upside. I'm going to leave the video there. If you found it useful and informative, smash that like button. I do appreciate that. If you're new to the channel, subscribe, and don't forget to join us down in Discord. Until the next one, though, guys, have a fantastic day. We are not financial advisors. None of what we have communicated verbally or in writing here should be considered as financial advice. It is not. Do your own research before investing in any digital asset or affiliate offers, and understand that investing in any crypto is risky. If you do, you need to be prepared to lose your entire investment. This video is for information and entertainment purposes only. All our videos are strictly personal opinions. Please make sure you do your own research and never take our opinions for financial guidance. There are multiple strategies, and not all strategies fit all people. Our videos are not financial advice.